Good morning. It's Monday, January 13th, about 6 a.m. Central Time. So precious metals in the outside markets are all under pressure after Friday's blowout jobs data. These are leaving the markets here on tilt. So some overnight headlines that I'm watching. The U.S. equities, they continue to fall after a stronger non-farm payroll reading. Accelerated U.S. Treasury yields pushed the dollar over the 110 mark, and the British pound leads the sell-off in foreign currencies, slipping about 0.7%. Now it's slipping a bit more, making new lows as I'm doing this recording. So looking at U.S. equities, you've got the NASDAQ down over 1%, the S&P down about 1%, the Russell down about 1.3%, the Nikkei even down as well. So red across the board on everything. So the focus remains solely on interest rates, where the higher for longer theme weighs in on the markets. Remember, if you rewind back to last November, analysts, they were expecting about 3-4 interest rate cuts in 2025. Now those expectations are just for one cut in the back half of the year. So it was June, now it's being pushed out to about October. So keeping inflation on the topic. So you look at energy prices, because you're going to need to have energy prices go down in order to get inflation going down. Crude oil is rising to the highest level in 5 months on a fresh wave of U.S. sanctions against Russia's energy industry, and it's threatening to really crimp supplies from one of the world's top producers. So U.S. imposed its most aggressive and ambitious sanctions on Russia yet, and this was on Fridays when it came out. So if you look at a crude oil chart, we got a breakout and an acceleration to the upside here. They targeted the largest exporters, insurance companies, and more than 150 tankers. So many of you that are working with me and working with Blue Line Futures are currently long crude oil futures. We put these on in late December. When you look at the chart, it was kind of hovering sideways and then creeping higher, and then we had a breakout to the upside. That's where we got in at, was looking at that breakout. So if you'd like to explore opening up an account with Blue Line Futures, send an email to info@bluelinefutures.com. When you get back to crude oil, remember that they have the 1,000-barrel contract, the 500-barrel contract, and a 100-barrel contract. So every $1 move is going to be that correlation. So $100 for every dollar, 500 for every dollar, 1,000 for every dollar. So you can position size it right just for you. So getting back to these markets and kind of looking at the overnight price action. So you do have February gold down about $22 right now, $26.93 last. So after making those highs on Friday, we've got this breakdown. Silver futures really getting walloped right now, down about 80 cents at 30.50. So just a lot of liquidation going on across the board in many of these different markets. So gold, it's edging lower as the global bond yields are continuing to rise as the uncertainty of the interest rate path of the Federal Reserve. So again, it was that jobs report that came out on Friday that really showed a breakaway number. We were all anticipating that would be a weaker number, like around the 150,000 mark, and it was well above it. It was like 260,000. So they're really, all the banks are paring back their expectations for the interest rate cuts, and that's where you're seeing gold futures come under pressure. And then of course you got the spillover effect on silver. Now you look at the gold silver ratio, that's going up right now. It's 88-1 and rising. So I'll probably start looking at silver again as a longer term investment when we get closer to like the $30 mark, where you could put a stop loss below that double bottom here on the chart. So not a formal recommendation out to the public, just what my thoughts are on these different markets here. So traders are going to wait for, we get a lot more economic data here this week. We're going to get the New York Fed's one-year inflation print. The expectations are going to come out here later today. We'll have producer prices on Tuesday, and then this latest round of CPI data on Wednesday. So looking at copper, copper's your best performing metal right now, along with the platinum market. Excuse me. And it's because Chinese exports, they beat the estimates, and Beijing pledged to increase domestic consumption here. The exports, they rose 10.7% to a record of $336 billion in December from 1 year earlier. So basically what happened is that China recognizes that Trump's going to come in office, so they just bought as many of these different commodities as possible. So that's why you saw, different various things like crude oil breaking out, copper breaking out, platinum, some of the agricultural markets, some of the meat products as well. So shifting gears here and looking at crude oil up $1.50, also natural gas up over $4. You've got Bitcoin down about 4 or 5% right now, down about $3,800, and we're closing in kind of on those lower support levels, that 91 to 88 trading range that we were at for a while. You look at soybean futures breaking out to the upside, corn futures breaking out to the upside as well. You had USDA report came out on Friday, was quite surprisingly bullish as they lowered some of the ending stocks on those particular markets. And then you've got some weather related issues going on down in South America. But, all focus is going to be on the U.S. equities. We're closing in on some of this support here. 58.09 was the low on the S&P. Excuse me. So it's down 52 points at the moment here. And you do have the 2s and a 10-year treasury yield. They are inching higher. So your performance leaders on the day, the VIX is your best performing commodity out there, followed by natural gas. Then you get into crude oil and heating oil and things like that. Anything that's energy related. You get to the bottom of the list. Silver is the worst performing commodity, down about 2.5% right now. You go year to date, you look where things are at. Natural gas, your best performer, followed by the VIX. And then you look at soybean oil. Take a chart, look at soybean oil, exploded to the upside dramatically. And then it's going to be all your interest or all your energy related products. You go to the CME's Fed Watch tool and you look at how the Fed's path is, only a 2.7% chance. So basically no chance right now that the Fed's going to cut rates at that January 29th meeting, unless you get a serious collapse in the U.S. equity markets. And it's more of like a safety cut than anything, but I doubt it at the moment here. So the only two metals that are long, according to my system, which is the breakout system, is copper and is platinum at the moment. Gold got very close to it, shifted to more of a neutral trend. It's got to get over 27.25, which that was about the high of the overnight session. So if you see gold futures retrace, break out to the upside, turn green on the screen at the close, then what you're going to see is some of the trend followers are going to come in there and it'll be more of a flight to safety path. Silver futures failed right at the resistance point, right at 31.67, 31.73 was that resistance. And now we're breaking back down here and looking to sell off to the downside. So I anticipate that much of this selling, this 80 cents that we're down right now, probably from 50 to 80 was a bit of stop loss and a bit of panic selling up from people that are most likely invested in just the metals, Bitcoin, and U.S. equity markets. You get into copper's starting to consolidate here and edge a little bit lower. And then, of course, platinum is giving up some of its gains as well. That $1,000 mark really acts as a psychological resistance point on the platinum market. We saw a lot of traders, I monitor a lot of like self-directed traders, things like that. They were selling once it reached that level. So typically what they do is they play this like $100 range where it dips from like 920 down to 885 is where they start to come in at. And then once you get to about 1,000, anywhere near there is when they let those contracts go. So you guys got any questions, you can reach out to me. I'm going to be traveling most of the day back to the Chicago office. So I'll most likely be unavailable for most of the afternoon into the early evening, but I'll get back to you guys here tomorrow if you need anything. So give me a call if you got any questions, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.